Welcome, folks. I hope everybody's doing well this Saturday. I know the weather has not been good in a lot of areas, especially down here in Texas. Today got a lot better. We're already in the 50s. The snow and the ice is melting. That's a good thing because we need electricity back online and everything getting back to normal. Okay, again, welcome to our channel. Today we're going to discuss BIGC stock options. We have two option positions. Remember, we were in the 80s and the 75s or so. But we'll get into that and see what our exit strategy is. Also going to cover CRSR, the gaming stock. We did another day trade. We're going to show you that the end result of that trade as well. And then we're also going to review on BIGC on why we are in the trade again. I have a little bit more information that I want to provide you from instead of just what I showed you in the previous videos. So we got a little bit of new information. It's going to be a little bit longer video. Bear with me, guys. Please click the like button and subscribe. Let's go ahead and start off with the CRSR, the gaming stock, the results of that. And then we'll come back to BIGC on why we're in the trade. Here is CRSR. I showed you guys the first trade on 2/17 where we made $258. Well, the same thing happened the next day. Now, this thing happened within about 30-minute period, guys. And, you know, instead of doing a cover call, I just pulled the trigger. And I took the $246. That helped us out for the week of $504 between the two trades. Just for two trades. One was a 20-minute, one was a 30-minute trade. I don't normally do this. Okay, matter of fact, I've never done 2 day trades like this in the same day. I mean, within the same week. I even got a notice from Merrill Edge stating that if I do 4 within a 5-day period of these type of trades, I have to have an extra $25,000 cash on hand, because then I'm considered as a day trader. You know, totally separate than your margin. Let's get back to the slideshow. This is one of the reasons why I'm into BIGC. The subscriber requested, Mr. Harshed there, requested me to check out BIGC and CRSR. I looked at BIGC and looked at both SRSR, and you know, we've been making money off of just day trading CRSR. Plus, we have a covered call on it. That's for later. But for BIGC, we've done a couple of exit positions that I'm going to show you later on in the video. I really like them because they're out of Austin, Texas, and they're doing great things in their profits. So let's dig into them a little bit. All right, BIGC, we covered this before, that they're out of Austin, Texas. Their stock has been going down recently. So I dug into it further on what some of this problem is on the shorts or what's going on. This is what I came up with. I'm going to put this for Market Beat. I'm going to post this down in the description underneath the video. If you select more in that one category, this will be in there. The outstanding shares is 67 million shares. Not billion, million. The float size is only 24.38 million shares. The average trading volume is about 2.5 million shares daily, or 3.0. That's a lot of shares. Now, they have a short percentage of the float is, almost 26% of the float. Now, this is what you're trading. Is this 24.4 million shares? That's what you're trading. And for lockup purposes, this lockup period expired on February 1st, just so you guys know. So there is no more surprises of lockups of people trying to do mass selling. So what's been sold has been sold. They showed the previous short volume. This is the last record date is as of the end of January. And then they cover how much it is in millions of dollars, the price on the report dates, and we're way underneath these prices right now. They're saying it's a good percentage of short interest. What is a good interest ratio? BIGC has a 2.0. Anywhere between 1 to 4 is generally indicates strong positive sentiments about the stock. and the lack of short sellers. So what I'm going to do, I'm going to provide this to you down below, and you guys can read all this about this. Okay, I'm not trying to sell you the stock. I'm just trying to show you why I'm into this stock. Now, the other reason why I'm into the stock, let's go to their PowerPoint presentation. This was their last quarterly earnings. They're showing you what their gross profit and margin non-GAAP is. Every quarter they've been going up. And look at their operating expenses. They've been going down to 17 and 18%, which is a good thing. There's another metric up here. The subscription revenue, mix shift for to enterprise plans, has been going up year over year here. You know, if you look at the matrix and look at their quarterlies, you can see where they go from 26 million from strong revenue, from 26 million up to 40 million a quarter. Okay, it's not a big company. Remember, this is a small cap company. So I thought, you know, I mean, we don't have too much to lose, right, if we hang in there. And then I also came across this paper from Seeking Alpha. It came out January 21st. And it talks about BIGC, Shopify, and Square. They're talking about peer play web builders. That's what BIGC is with Wix. Shopify and Square provides more of an ecosystem for merchants both online and offline. Okay, so then they go down here and they talk about the product overviews. They have been best for fast-growing businesses. And they talk about the pros of the different companies, the Square online. Then they talk about here the BigCommerce is very comparable to Spotify, except it purely focuses on e-commerce. One can make the argument that BigCommerce is actually better than Shopify for large and fast-growing corporations. The company doesn't have an app store the size of Spotify, but that is because a lot of advanced features are already built in right from the start. They go through all this. There's a lot of great information. Now, the cons are BigCommerce is not ideal for the same type of customers that are not a good fit for Spotify. It also is not ideal for beginners, as a common complaint is that it has a steeper learning curve than the other web builders. And then BIGC will automatically bump you up to its more expensive packages once sales exceed specific thresholds, whereas Spotify or the other web builders will not do that. So they show the different type of revenue and the margins. This is actually some great information for you guys to read. So what I'm going to do is I'm going to take this PowerPoint you can see inside here, but I'm going to see if I can copy and paste this and put it down in the below area that you guys can get to, so you guys can research all this stuff yourself. All right, let's move on to Friday's trades that I performed against BIGC. All right, folks, this is Friday at 11:38 a.m. We're going to take care of BIGC right now. We're going to do some rollovers. We're going to do some sells. Let's go ahead and get out of this first position. I'm going to buy to close my 75, and then we're going to put a limit on here. We're going to put a day, and we're going to put a price about 20.29. It's currently right now at $1.28. I don't know if I'm going to be able to get out of it this quick. They probably want a little bit more for me to get out. Okay, let me give it 30 cents out of this trade, and then we're going to turn around and sell it, and I'm going to show you we got a little bit of profit off of it. Okay, so let's see if she'll go our way. Let me go with 30. Yeah, you know, this should go our way. We'll see. Okay, 30 cents. Let's go ahead and click this. Okay, we're executed on both of them. Okay, so we sold the option first. We had to get out of the option. It cost us $30 to get out of the option, and then we sold the actual stock for 10 cents. Well, $10 over the option. We're going to look pretty good with this one. I think we're going to break even on this, but now what we got to do is we got to go back in, and we have to roll over our 80 option, and then we'll be finished with BIGC. Okay, here we are. We're back with BIGC. So we're going to come down here and we're going to hit sell, and then what we're going to do is we're going to roll her over to the next month. We're going to roll it. We're going to buy to close. We got one option. And then we're going to roll this puppy over for one more month. Okay, remember they're monthly options here. So expiration date will be March 19th. All right, let's go ahead and see what the 70 looks like. Right at the money. So that's going to give us $8 and something. And 20 cents here. Let's go back to our options here. So what are we looking like here? Looks like 818, but we're going to go with a 70 price. So it's going to be 7,000. Okay. That's going to put us at minus $182 because we're going to go with the 70 call. So then let's go ahead and go with, if we go with the 70, then that'll give us some premium for the next following month. That's how we're looking at that. All right. We're at the 70 option. The price is $70, and this thing could go down. So what we're going to do is we're going to try to get as much premium as possible. It's only like 7-8 cents to get out of this position. So we're going to go with $7.93. Let's preview order. Now this is a roll now. What we're doing is we're rolling over to another whole month. We're going to get $793 in premium. My commission was $1.30. See, this is a net credit. Make sure it's net credit. Okay? So we're rolling it over to another month. That's all we're doing here, guys. All the big C's were executed. And one of Rockets this morning of 500 shares were executed. Oh, that was good pre-market. Okay, good. All right, let's go ahead and settle this stuff up here and show you what happened. All right, let's go back to Big C here. All right, we're rolling Big C over. Because we rolled out the 70s, let's go ahead and close these guys out here. So there's only two positions left in active. We've got 100 shares, which is the 70 strike price, which will give us 7,000, which is a minus $1,503, but don't let that scare you. And then we received a premium because we rolled over this position, the 80, over to the 70. Okay, that's what we did. So the 80, we rolled over to the 70, and we went for another month. So they gave us another $794. It cost us $6 to get out of that position, so we kept $846. So we picked up another $794. As long as it stays over 70, it gets called away in March. Okay, so these are monthly options. So we have to wait until March 19th to get out of this position. I hope you guys understand that. Okay, and so we got that premium just sitting in our account now. And then all together, let's see what this position will get us. $145. Now that's not going to be a good percentage for us. You know, on our 75 here, we picked up, we only took almost an $8 profit. That's it. We only got an $8 profit off of our 75s. Sometimes it's better just to break even or make a little bit of money than lose money. Okay? That $1,500, trust me, if we didn't have options to offset these costs, I mean, look at these costs. These stocks dropped. Luckily, I went deep in the money on these puppies. It'll save your position, okay, for another day. You know, I could have picked a 75 for next month. But you know what? I said, you know what? Let's just go with the 70. And that's why you see a bigger negative here. Okay, so we'll just pull $145 and maybe, what's our percentage of return here? Let's see, off of 14,040. We made $145. I mean, this is in the future now. We're talking in the future. Okay, we take that and we divide it by that. And then we got a 1%er. 1.03. So we're going to get 1.03% off our investment capital. Because remember, they offset our investment capital. We didn't have to really pay that amount because we got all this premium. Okay, this premium here is our premium. Okay, which offset this. Because remember, we went deep in the money. So not at the money. So that means that's all the capital we needed to have up front. So it's only $14,040 of capital that we had up front. versus $16,000 because we went deep in the money. I hope you understand that concept. So going deep in the money sometimes protects you for a month. It can even protect you for 2 months, depends on how you roll these options out. And yes, it's only 1%, but in how many days are we going to get this money? Okay, we went into the position in 210. We're going to be out of the position on 319. So I'm going to say, let's say 40 days. You know, just be conservative, let's say 45 days. Okay, if we're out of the position in 45 days, you get a 1% return. It's like every 2 months, if you can get 1%, you would get 6% a year return. 6% a year beats any CD out there. CDs pay 1% a year, 1.5% a year. So you're getting a better rate there. And trust me, when the S&P goes back down and everything else, trust me, you're going to average out about 7 to 8% on an S&P. So that's almost like, you know, just a little bit south of the S&P, but we're only doing it for 45 days out of this position. Okay, I hope you guys understand that. I appreciate you guys watching my video. We're going to have other videos coming up here today, but this is going to be on Big C and what we did to roll over our position to protect ourselves. Remember, when we go deep in the money covered calls, it protects you. It gives you peace of mind. And that's what happened to that stock. I know I need to go deep in the money. Okay, thank you guys. Click the like button and subscribe. And share these videos with others. All right, you guys take care and have a good day. Until next time, this is Sonny, and I'm out.